Are bonds and debentures different? Let's find out, shall we? If by any means you think bonds and debentures can be used interchangeably, then this video is meant for you. I know they often sound similar, however, there are a lot of differences you need to know about. But before going on to that, hi, this is Harsh and I welcome you all to our knowledge series by SMEST Discover, where you can get smart about investing. There are two types of debt instruments, bonds and debentures. All debentures are bonds, but not all bonds are debentures. Let's get into the details to understand what is a debenture. A debenture is a type of bond that can be secured or unsecured. An unsecured debenture relies on the creditworthiness and reputation of the issuer and does not have any collateral backing. Debentures are a popular short-term financing option for private issuers looking to expand their operations or fund upcoming projects. And they carry a fixed or floating interest rate. The interest rate on unsecured debentures is generally higher than secured debentures because of the absence of a collateral backing. Pretty simple, right? Now let's discuss what is a bond. Bonds are a most common type of debt instrument issued by the government or large corporations to raise capital and are always backed by collateral. Since bonds and debentures are often considered similar, let's see the key differences between them, shall we? A holder of a bond is often called a bondholder, and for a debenture, it is known as a debenture holder. The bonds are secured by collateral, whereas debentures are not always collateralized. Bonds are less risky compared to unsecured debentures. Bonds are a long-term investment and their tenure is higher than debentures. God forbid if the issuer defaults during liquidation, bondholders are given first preference over debenture holders for the repayment of capital and interest. Bonds cannot be converted into equity shares, whereas the issuer can convert only fully and partially convertible debentures into equity shares on the expiry as specified in the clause. Let's understand and look at this chart of bonds versus debentures. Meaning, bonds are debt financial securities with physical assets and collateral backing that are issued by large enterprises and governmental organizations. Debentures are financial instruments used to finance debt that is issued by private corporations and can be secured or unsecured. What is the holder called? Bondholder. And a debenture holder is known as a debenture holder. Bonds are secured by collateral or tangible assets of the issuing firm. The debentures, on the other hand, are not always collateralized by an asset. Secured debentures are backed by collateral. The issuer's trustworthiness and reputation are important factors in supporting in case of unsecured debentures. Let's look at the risk. Bonds are less risky compared to debentures. The debentures, whereas on the other hand, are risky sometimes in case of unsecured debenture because of the absence of collateral. Tenure. Bonds are long-term investments and their tenure is generally higher than debentures, whereas debentures are generally short to medium-term investments and their tenure is usually lower than bonds. Priority during liquidation. For repayment of capital and interest amounts, bondholders are given preference over debenture holders if the firm is about to go out of business. Debenture holders are given second priority over bondholders for the return of capital and interest amounts if the firm is about to go out of business. Convertibility. Bonds cannot be converted into equity shares of a company. Whereas debentures, the issuing company can convert only convertible and partially convertible debentures into equity shares on the expiry as specified in the clause. But the question is, should you invest in bonds or debentures? Bonds are no doubt a good option for risk-averse investors. They are a less risky option and safer investment than debentures and are also a suitable alternative for long-term investments. Debentures, however, have the potential to provide investors with larger returns as compared to bonds and are a viable alternative for short-term investing. It is up to you to determine whether you want to invest in bonds or debentures based on your financial goals after analyzing the advantages and disadvantages of the two as explained above. I hope you've got a solid understanding of where you need to invest. Well, that was the plan. We hope you are excited to start your investment journey into bonds. Visit SMEST.in and take the next step towards investing wisely. Stay tuned for many more exciting lessons coming your way. But before signing off, always remember investments in debt securities are subject to market risks. Please read all offer-related documents carefully. For any queries on this module, please leave a comment below. See you in the next video.